Hey folks, Tuesday the 29th of August 2023. Welcome to the weekly look ahead. So we were off yesterday, UK bank holiday, and a day off for me in Ireland. And so quite a busy week coming through data wise here. We have, as you can see on the right hand screen, really picking up from today on the US data. You got the CB consumer confidence coming out at 3, Jolts also at 3, then APIs tonight at 9:30, the usual. Then German CPIs tomorrow at 1. But the big stuff obviously tomorrow is ADP out of the US and GDP quarter on quarter to come through there. So retail inventories, pending home sales, not so interesting. DOE, again, not so interesting really for us. But obviously, if you're trading oil, that is Super Bowl every Wednesday. But going through the big story and the big data this week is, of course, NFP Friday. And then not to forget, though, we have CPIs out of Europe, 10 a.m. on Thursday, but then going into 1:30, we got the PCE, core PCE and PCE there at 1:30, pre-market for the US, and then Chicago PMI. So the PCE is going to be pretty well watched, I have to say here, as Jerome is kind of about to do a victory lap. It's set to come in a little hotter than last week, though. PC 3.3, last month expected a 3.3 above prior 3, right? So, just kind of keep an eye on that. And then as we go through to Friday's data here, we get that a bit of manufacturing data out of Europe at 9 o'clock, but then non-farm at 1:30, and then ISM at 2:45, and at 3, and then that's going to round off the week here. So the usual amount of data to keep us on our toes and to provide some really good trading opportunities and mispricing in these markets. But I wanted to get on to a couple of stories that we have here. So to look at really, as we kind of come into the real start to this week, which I think is today, just kind of getting the wrap from last night. The markets are sure they're having a wee bit of a bounce there from quite a bit of selling last week, I think we've seen a good bit of buying coming in on the SPOs there, 4300s or thereabouts, 4370s, something like that. But is it enough? And are we going to get up out of here? I don't know. I mean, I think there's a lot of headwinds actually just gathering momentum at the moment. And so, one of the big things here is the Chinese PMIs coming out this week. And we're going to talk about and look at some articles here looking at the Chinese economy and how things are really not that great. Xi Jinping is coming out with quite a lot of stimulus. There was some tax breaks there for traders as well coming through. They're really throwing a lot at the Chinese economy to kind of keep it away from deflation and from the economy essentially stalling. So we talked about this last week a little bit, but I'm going to post the links to all of these in the YouTube. So please do feel free to have a read of these. The VIX, I talked about quite a bit here. As always, it's a really good sort of hedge, if you like, on equities. But going over to the Chinese story, just want to kind of bookmark, what is going on with the Chinese economy and the real estate sector essentially as well. And so a couple of traders in the room here do have exposure, quite a lot of exposure to Asia, APAC and Chinese, specifically Chinese real estate. So, I just thought we kind of have a little quick look at this because Country Garden is I think it's the 6th largest property developer in China. So they're running into some serious problems, and they have essentially bond payments to make, and it's not looking likely that they're going to make them. So, really this article from Bloomberg is sort of, the most up to date on the situation here. Here really is the bulk of it here. A missed payment could impact the housing market in China. Just get rid of that housing market in China even more. Now the 6th biggest developer seeing sales that are slumping providing a liquidity crisis, and with a 2.9 billion of note obligations. So these are essentially obligations that they have to pay back to their bond holders, i.e., their creditors. And they've warned about major uncertainties about these bond redemptions. So, you're all familiar with the term burning the bondholders, right? If you're anywhere in Europe, you will be familiar with that term from the '08 to 14 sort of crisis, the Greek bond crisis, all that sort of stuff. So, are Country Garden going to burn their bondholders? Probably not. And they'll probably get some sort of a bailout. But the biggest talking point here, right? The biggest talking point, why we're talking about this, is that this may quickly become tradable information, as in, it's the contagion effect of how this may knock on to corporate real estate loans in the US. And the largest, the bulk of corporate real estate projects in the US are held by the KRE index banks, the regional banks, not so much the big, the big kind of the big sort of systematically important banks, the SIBs. It's more the regionals. So we've seen already a bit of a hairy, scary moment for these non-SIBs, these regional banks earlier this year, when you saw the collapse of Silicon Valley Bank, the KRE index by the dip. But it was pretty scary at one point. I mean, you're seeing Schwab well below, I think, 50s. I mean, I think it was like trading below 40s at one point. Very cheap, but this could be, and I talked about this at the time of the banking crisis. I said, really, the big holy shit moment and crash moment here is actually where the real estate loan books start to go sour. And, that's kind of been a theme that I've been keeping an eye on. And, it's obvious, it's in the zeitgeist, right? Because corporate real estate, all these developers with office projects and kind of corporate real estate, retail and offices in particular, not so much warehousing. Warehousing is pretty strong, but for the office and the retail sector, with spending moving, so fast online, there being less kind of high street shopping, and then also the work from home sort of movement. I think we're the strongest in Europe, for if not the world. I think here in Ireland, for the work from home movement really kind of being entrenched now. Um, you just imagine if you have a whole, like, 5 office blocks in London and you're a real estate developer. Well, you know what? I don't think they're going to be filled up that quickly, and I don't think you're going to get the premium rents that you were probably looking for. I mean, obviously, a brand new office build is going to be a lot more attractive than a 20-year-old building down in Canary Wharf. However, I just think, we've heard this like in the All In podcast, David Sachs talking about people he's talking to who are property developers, corporate property retail developers. They're just throwing the keys back at the bank and just saying, I'm gone, I'm out. It's your problem. Right. And so really, what's happening in China here is really kind of the tip of that spear. And if that does sort of collapse, you're probably going to see a knock-on effect into the US. And then you could be into a sort of big short number two situation, where this time it's not sort of home loans, it's kind of retail and corporate real estate loans that could bring everything down. So look, this isn't happening today or tomorrow. It may be forcing a bit of a drag and a headwind on equities markets for the moment, but there's other things at play as well. You can get 5% on your T-note bonds, or you could risk your biscuit in the Nasdaq for 10% or 12% or whatever the yield is in the Nasdaq, right? All that sort of stuff. But anyway, I'm getting off base here, but do have a read about the Chinese secret garden situation here. There's a really good accompanying article to this, which I would recommend, from the Peterson Institute here. How serious is China's economic slowdown? Really talking about, you'll see here highlighted, no doubt China faces many structural and other challenges: slumping productivity, a shrinking labor force, restrictions in the transfer of technology imposed by Biden, ongoing real estate bubble correction, elevated unemployment among youth workers and leadership, prioritizing party control and national security over economic growth. Okay, so this is really, outlining everything that is wrong with the Chinese economy at the moment. But, I don't think we're going to be getting into a very bad situation. I think, it's much talked about, but, there's that old adage that if China has a sneeze, the rest of the world gets a cold, right? And so, if you want to be up to speed with this situation, I would have a read of this article from the Peterson Institute. Really, really good writing, and you should definitely subscribe there, I think. Okay, something we've been tracking here for 2 weeks now is this Australian LNG gas plant workers' labour strike. Okay, and so there, it's still here. It's still here, hanging around. Tagging around like a bad smell. To be honest, Nat Gas had a pretty decent, unexpectedly a pretty decent day yesterday, because this Australian strike is essentially still in the air. And as I talked about last week, it really then outlines the potential risks for a bidding war for spare LNG capacity between Asia and Europe, right? And so, obviously, if we have an outage in productivity in these LNG plants in Australia, well, then, China and APAC is going to be then going head to head bidding for spare capacity, as in stock, gas stock, LNG stock for, against Europe. Europe and China vying for it. So, you're seeing a little bit of a bid unexpectedly into Henry Hub natural gas there, which is the US classification. I'm quite surprised that people may want to, pin yesterday's bid in Nat Gas against this Australian situation, but nonetheless, you're seeing European gas futures up and highly volatile over the back of this situation. So the same sort of rhetoric as we saw last week at the start. So, and then oil, going to oil, I think oil's, I think it's going to have a pretty decent end to the year, but there are some seasonal patterns about to play out where essentially all of the refiners, well, firstly, this article is talking about the upward momentum on oil to be sustained. Now, this is because they're forecasting that Saudi Arabia will sustain their 1 million barrels a day cut through September. Into September. All right, and so we're going to hear about that really in the first full week of September. We should hear from OPEC because that has been the pattern as to when they give us that insight as to whether they're going to extend the cut or not. Okay, and you're seeing generally the chart here from 2019 on the hard left to now on I think Brent here. So we're at 84.40s or whatever on Brent. Fine. So yeah, look, I think that could be the situation. However, I'm long the oil curve here, and as most of us are in Duggan Capital. But there is a seasonality to this, and that a lot of the refiners will build stock of crude, forcing a natural demand and therefore inflection upwards on price into the end of October. And come the end of October, they actually then just want to be they're not a net buyer anymore. They're going to have already stored everything they need on the refinery side, and then they're going to refine that through their facilities through to the end of the year, thus minimizing tax implications that they may incur as a refiner. Okay, so I will not be surprised to see a bit of a $5 sell down in oil over the coming, probably, let's see, where are we here? We're coming into September first week, so probably towards the final 2 weeks in September. I'm going to be lightening up on my longs. I'm going to be buying major dips and major pullbacks on oil, but not on the front month. But it is going to be coming into a little bit more volatility as we go into the final trading days of the October contract, which will of course be kind of like the 15th of September through to the 25th, which of course will be the final notice day for trading on October. All right, so lots of details about trading on spreads and whatnot. So if you're interested, get in touch. Info@duggancapital.com. Anyway, Wanted to finish off here just this article here on Saudi Arabia's foreign reserves plunging in oil, or sorry, plunging in July on oil production cuts. This isn't really that big a deal. It is kind of breaking news and important news on oilprice.com at the moment, but you know, I don't really know if this is that important, but I think the way to read this is, are the Saudis going to be motivated to sustain the cuts through September or not? That's really what you could read into this. And I think they would be, because even though this would kind of suggest that they're having a little bit of a cash call as an economy. Okay, they're pulling foreign reserves back, and they're also going to get a performance-linked dividend from Saudi Aramco starting this month. So I don't really see that they're going to be short of cash. And I think Saudi and short of cash are kind of two things that do not normally sit in the same sentence. And, I think they are going to hold the cut through to September. Okay, so jumping over onto the charts, right? Let's have a little look where we are. Lots of markets to look at, lots of interesting stuff going on. But really, here looking at the SPOs, here, we have to the all-time high on SPOs about 48.06 here on the September contract. We're sort of kind of sideways really for the last kind of week here, trying to inflect up. So if we kind of zoom in on the action here, you're looking at daily bars, this 44.39s. We really need to, I don't think we need to see that come in as a floor. I think we kind of need to see like the 44.11s come in as a floor here. I'm tracking 44.28s, and we're going to be getting very sharp and precise on where we want to be long short these markets when we go over a look ahead in about 40 minutes in Duggan Capital here. But, you're really just seeing this violent sideways stuff. So, I mean, I think NFP week, I think people do care about this. But what I want to talk about is we do have like ADP and PC coming through, right? This week. And I think the market, as it looks to what the Fed may do in terms of being dovish or hawkish, I think if you see this data come through as pretty good, right? Strong ADP, strong ADP, strong NFP. We take PC off the table for a minute. I think that's going to feed into the Fed and Jerome Powell to say, okay, things are getting a little bit hot, and we're going to do another hike in September of 25 bips, right? If you see the data come through, like ADP and NFP come in soft and a net misses on both, then that's going to feed into, okay, the Fed are going to be happy to stay where they are on the rates and not do another hike. Okay, so how you would interpret that is you're actually going to want to see a miss on NFP, or a miss and a miss on ADP, to then be looking to go long on equities or be buying pullbacks on equities once we get that NFP number, and when we get the ADP number prior to that, right? You're going to be buying dips. However, if it comes out as a beat, I think you're going to want to sell pops on equities, and then we may be looking at sub 43.70s by mid to late on Friday. So let's see. I'm talking about down here, and I think we do kind of need to trade down to here, like 43.50s, to then pick up the bars that will take us much higher. And so, I don't want to forecast too much here because it's impossible to do really, and it's not really the name of my game, but I'm just really providing contextual views on the market and keeping you in the know of what's happening, right, and where we sit, and technically where we are strong, where we are weak. Okay. So yeah, look, if we come out with really good data, I think that's bearish. If we come out with if we come out at a miss on the data, I think that's actually bullish. Okay, simple as that. Keep it simple. All right. Probably look at oil, and then we'll head off and leave you guys to trade for the week. Looking at oil here. Yeah, look, we've had this downtrend in effect, sort of. It's not pretty, but it's kind of, the highs came in here 30th of November last year to the highs on January this year, and you do see the market has really like popped up here When did that pop? Really, the 27th or 26th of July, and then pull back here. Look at that. I mean, absolutely beautiful. Bang, up we go. I mean, we got like $5 out of that bid, and then we pulled back here last week to find those buyers. We were buyer here last week. You see the level 77.62s. We were actually buying 61s last week. And we're still in this trade. Well, I'm still in this trade on the front month and some of these spreads here. So we're loving, loving, loving this trade. Where am I targeting? 82s. Sorry, no. Just let me, yeah, sorry, 82s and actually up to 85. So if we can hold it that much, but yeah, I think we're going to 85s. So look, this is not trading or investment advice. I'm just showing you what the price is doing on oil right now. So if you're long, I love it. Okay, and that's it. I'm going to leave you there, guys. So listen, have a fantastic week. Stay lucky. Please do click to link and subscribe. It really mean a lot. And yeah, we'll see you next week. Otherwise, get in touch in the Discord or on email, info@duggancapital.com. All right, take care.